What's going on YouTube? It's Ben Chafee with Highstrike here. We're going to be talking about some of Warren Buffett's tips to investing. So over here at Highstrike, we're known for trading a whole lot. That's what obviously a lot of our services revolve around, are going to be day trades, swing trades. We don't really focus too much on just investing. So that's what we're trying to spread a little bit more knowledge, because it is something our entire team does. And it is something I am very passionate about, is investing for the long term, especially as somebody, I'm 25. I do look for long term, and I understand the power I have from investing young. So let's talk about some of Warren Buffett's, tips and tricks and really his advice. We're just gonna be talking about 3 main points during this video. First point we're gonna talk about is going to be invest in what you know. This is something, Mr. Buffett has talked about over and over, and it will kind of lead into the next piece we'll talk about with diversification. But a lot of people try to look for, that next stock that's gonna move from $1 up to 1,000, right? Like they don't really have a strong understanding of the company, and that's a lot of times why stocks might have low market cap or something. Maybe it's a new company, maybe it's a company not a lot of people understand yet, but only invest in what you understand. So for example, I invest heavily into Apple. It's a business I understand. I use a lot of their products. Also something that Warren Buffett became very wealthy off himself. But it's a company I use their products quite literally every single day. I got an Apple Watch, a phone, a MacBook. It's something I truly enjoy their products. It looks like they're trying to even get in the automotive space with the Apple car. Who knows when that actually will be hitting, the roads, but I understand their company. I understand, it is high performing. I'm not trying to jump into something, I don't have a strong grasp on. Like for example, a lot of pharmaceutical companies, there's a lot that goes on behind the scenes that I don't understand. For those that don't know, I was an engineer for a couple years in pharmaceuticals. I worked for Takeda and AbbVie. So 2 companies, to be honest, while I was working for them, I felt okay investing in because I understood the company while I was there. But a lot of these smaller cap pharmaceutical companies and stuff where I might know where they're located, that's about the most I know about their products. I don't really like investing in, because I feel I don't have a strong grasp on what they do, what their mission statement is, or how they're going to grow over the next few years. So that's Mr. Buffett's tip number 1. Invest in what you know, nothing more. Don't go looking for that answer that you don't really understand if you're just trying to get rich off of it. Point number 2, which I kind of hinted on it, diversification can be dangerous. So once again, investing in what you know, you might not be that diverse. A lot of young people my age like to invest in tech stocks because they've seen great growth. And once again, it's something that our generation uses a lot of. I use the example of Apple, another one might be Microsoft. Obviously within the same sector, both massive tech giants, but young people understand what they do. So rather than me trying to take, 5 to 10% of my portfolio and putting it in 10 to 20 different sectors and smaller companies, trying to diversify myself, very intensely, I might put a little bit more money into tech because it is something I understand. I like putting money into growth stocks a lot. I do have a couple, long-term holds, blue chip stocks that aren't really much of a mover, to be honest. Like Disney is an example, one of them that, I've just been holding some shares for a few years now. Not a huge mover, but it's a blue chip stock, and I'm not looking to overly diversify myself. I might put a little bit more money into tech stocks rather than worrying about, I need something different from Disney, I need something different from Apple, I need something different from SPY, I need something different from Q's, I need to get some more in the weed sector. Not something I quite honestly worry about too much. And that leads us into, number 3 here. Index funds are your friend. Warren Buffett talks about a low price index fund might be every single new investor's best friend. That's something I adopted very, very early in my investing journey. I personally think the finance realm, the finance career path exists for a reason, right? There are institutions that are working on this around the clock, forming index funds that are going to perform. Of course, you have to do your own due diligence and research on which ones are going to perform well. You can't just throw money into any ETF or index fund and immediately expect returns. But the reason why is things like SPY, YQs exist. A lot of these larger index funds, they exist because they're made to perform by financial institutions that, once again, they have these full-time careers to create these things for us. And I personally view it as these ETFs kind of diversify for me. So that's what I think Buffett's getting at as well when he says diversification can be dangerous. Kind of use the S&P 500, let that diversify for you. there's a bunch of different sectors that go into the S&P 500, and there are 500 of the largest market cap companies in the US is what makes up the S&P 500. So you're essentially investing in 500 different companies when you invest in one of these S&P 500 index funds like SPY, for example, or VOO. Those are going to be following the same thing. So rather than me kind of putting my energy into worrying about completely diversifying my portfolio, yes, I do take small pieces and put them elsewhere when I see a risk reward opportunity. But to be quite honest, at the end of every month when I do, or really bi-weekly after I get every paycheck, as when I was still an engineer, I would just be looking to put it into index funds rather than trying to find that next stock that I think is going to blow up. I do keep about 10% of my overall portfolio that I will look for, a little bit more of a risky opportunity. Not necessarily penny stocks. I don't really like penny stocks too much, but maybe something like a cryptocurrency I'm looking into that is going to be much more risky than, say, investing in the S&P 500 or an ETF of any established sort, like Qs. So that being established, that Mr. Buffett and I are of the same opinion that a well-priced index fund or ETF is every new investor, young investor's best friend. I'm just going to share some of my favorites with you guys. So kind of the granddaddy of ETFs is going to be SPY. VOO is also going to follow the same thing. And then some of my personal favorites are just going to be SPYG, VUG, and QQQ. I obviously encourage you guys to do your own due diligence and research on these. Don't just go throwing money into them. All three of those are, ETFs I personally do believe in. This is not financial advice though. I'm just looking to share some of my portfolio with all of you, just because, we get the question a lot, and we're just trying to be more transparent with you all and maybe help somebody out that hasn't looked into investing before. So as I said, those are 3 of Warren Buffett's top tips and just a little insight from me. Make sure to check us out on Instagram, Twitter. Hit that thumbs up button if this video is helpful to you, and please drop us a subscribe. I will see you guys in the next video. I'll see you later.